There's nothing out there that's doing 213%. It's Ryan here, CEO and head quant at happytrader.io. Today, we're going to be going over the Q3 results because we want to make sure that all of our members know that they're getting a legit product that tests out across not only multiple years, decades, months, but also within individual fiscal quarters, similar to how stocks perform. So let's get right into it. We're going to start with the NASDAQ, the NQ futures. We're going to be running these tests on our long only, and we're going to be running them on a macro time frame on the 45-minute chart. This will be a pretty quick video. So we're going to get into the margins first. So we're going to look for the NQ, and that's going to be the first order of business. So we're just going to look for NQ. Margins can change, so we always want to be checking the margins. So let's go ahead and pop these margins right on in, and we're going to put it right here into our back tester. And we're just going to stick with one single contract, no scaling. We do have a lot of traders that do scale. Scaling in, scaling out is something that is a little more advanced. So we're just going to be using one contract to see how we did against the market. No pyramiding, so no orders in the same direction. And then that's it. So we're going to set it up, and we have everything pre-populated. So we have April 1st, which is the beginning of fiscal Q3, all the way to June 30th. 2024, right? So deep back testing is enabled. Let's go ahead and let her rip and see what we come up with. With these back tests, this is something where, you made 84%. Okay. So you made about, let's call it 8 years of gains in the S&P. Now, the thing is, you had a huge drawdown in Q3. Q3 was a correction for the market. So you have to take that into consideration. So when you put on a trade in the beginning of a fiscal quarter, you're going to run into a potential drawdown. You need to know how to hedge that. And the way that we like to hedge that, and this is not financial advice for educational purposes only, but the way we like to hedge that is we put on our core position when we get our signal, and that'll be our uptrend signal if we're running our long only strategy. And if we go down below, we're going to delta hedge that position. So we're not going to close our core position, which is long, right? Long is our core position, meaning market going up. We are going to take the opposite side of the trade, delta neutral, right? So if we have an NQ long, we're taking the MNQs, the micro NQs short, 10 of them, and we're going to wait all the way until we get back to baseline. Now, when we get back to baseline, we're not just going to take the hedge off, because as you can see here, we went back down. So you would leave that delta hedge on. So what I like to do is leave that delta hedge on, but start to unwind it once we get maybe 2, 3, 4, 5%, and we start actually getting into some kind of gain scenario. When we start kind of mooning up like this, you can start to take off maybe 2 of those MESs here, another 2 here, another 2 here. But if we go back down, you can put them all back on, and you can use your starting capital so your hedge can be at baseline at all times, which is about right here. And what we like to do is make sure that we are hedging at baseline until we hit a definitive uptrend. Now, is that going to create a little bit of drag on this 84%? Of course it will. Is this percent profitable a little bit overheated compared to normal happy trader? Yeah, normal conventions are a little bit lower. So it still looks like we're kind of overheated, but we're looking at such a short time frame here that you need to take that with a grain of salt. Now that we have the bad stuff out of the way, let's look at the good stuff. Average trade expectancy, $1,200. Total number of closed trades, only 16 trades. Let's go into the trade log. You can see that we took an absolute battering, right? So if these numbers look scary to you, that means you're trading too large. You need to switch to the MNQs. It would only be 1/10 of this number here. So you'd have $754 instead of 75. And you can see that we took some pretty big losers, right? So took some big losers, but then let's keep going and look at all the trades. We had a big winner, a smaller loser, a huge winner, a huge winner. That one was all right. And you can see we had a couple pretty big losers, but then look, huge winner, huge winner. And you can see that's where Happy Trader, that's the magic of Happy Trader. is that you can have a lower win rate. You can have a sub 50% win rate, but because those winners are so darn big compared to those losers, you're going to end up with this number here, which is the average. This is the sum of money. Literally, TradingView says it, the sum of money gained or lost by the average trade, net profit divided by the overall number of closed trades. So you can see we made about a third of a percent. So not bad. And that's across all trades, including these losers. The other thing that I want to bring up is you don't have to trade signals just uptrend to downtrend, right? So, you can see here, let's just go to one of the signals. You can see like uptrend, downtrend. Some of these are scalpable. And if you're shorting the market, some of these are scalpable when you get these signals here. And you can just see here, we're kind of like hitting an uptrend. We had a little bit of kind of a fake out. Looks like we're going to start heading back up as the week kind of progresses, but we never know, right? So it depends on a lot of different things. We have a lot of big things happening in the world right now. So that's going to be super important. So you can see there, that's the NQ. The next one we want to look at is the ES. And we did great on the NQ. We had 84%. So that's a successful quarter. And again, you can scalp these signals or you can trade with a smaller size, but that's crushing any hedge fund. That's crushing the S&P 500. So let's go to the ES. So we have the E-mini S&P 500s. You can see here that the margin is lower. So what we're going to do is the same exact thing, copy the margin. We're going to switch on over to the ES here, and we are going to open up our strategy tester. All of our dates are pre-populated already, but we're going to change this here. So we're going to change our margin. We have our ES contract up. We're going to stick with the 45-minute chart, and everything looks good. So we're just going to hit OK. We have deep back testing on. Day range looks good. Let's go ahead and run the report for the ES. Let's go ahead and look at the overview. So again, with the S&P 500, this is something that I talk about in a lot of videos. 27%, is it worth waiting this long? Almost the whole quarter. Is it worth waiting this long to get 27%? Well, it depends on who you are, what your risk tolerance is, etc. So 27% is great. Okay. 41% profitable for happy trader, a little overheated. That means that the dip really did get bought. Now, you never know when you're going to enter the market, right? So again, hedge, 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 hedge. And I'm not telling you how to trade your real money, but if you're using sim trading and you're using Happy Trader, put on a delta hedge. So if you put on a core position long and the market goes short, don't just sit there and say, oh my goodness, oh my goodness, oh my goodness. You want to protect yourself, whether that's through protective puts, whether that's through direct using the MES 1/10 the size, 10 contracts. So what? You're going to have to pay those commissions. No big deal. Now, when you get up to here, you're thinking, oh, maybe this thing's going to break up. But we don't take that hedge off. We do not do that until we see something like this. And we might take the hedge off, right? So for us, it might be 20% if we're hedging. But that's still better. That's 2 times better than what the average market return is over the course of a year. So even with a really subpar backtest with a huge drawdown, this is like the worst case scenario for a happy trader. You're still making an average trade expectancy of 243 bucks, and it was only 17 trades. Not bad, right? And you can see again in the trade log, huge losers. Yes, the market corrected. The thing you got to look at though is, hey, did you have a chance with these run ups? Could you have maybe scalped? Could you have gotten out of a trade? Should you have put on a hedge? You can see there's opportunities to make money even on the losing trades. This back test only goes from uptrend to downtrend, right? So very rudimentary. So if you were trading with a trading bot, this is exactly what you would end up with if you had the margin, right? So 17 trades and to end up with bucks, not too bad, but I much prefer the NASDAQ, and we do back test out way better with the NASDAQ. But at the end of the day, yeah, did we have a drawdown? Sure. But as they say, and as I say in all the videos, there's no free lunch on Wall Street. You're going to have that drawdown. There's no free money unless it's Friday afternoon. The next thing we want to look at is Bitcoin. Let's just kind of see. I'm expecting a negative backtest on Bitcoin, but we will go ahead and run it anyway. But here's the problem with Bitcoin is the margin is just so incredibly high. So let's go to it and we're going to look at what the margin is. And you can see here, Really, really crazy big margin, right? So let's go ahead and plug it in anyway for the sake of transparency. And we're just going to look at the quarter and we'll just set to the one contract and everything's pre-populated and let's see what we have. We have a negative 43%, right? So that should go to show you that, if you're trading something like Bitcoin, you really have to be aware of kind of, what the market's doing. Let's go ahead and go to today's date. And today's date is 9/11. I just wanted to point that out and take a quick moment of silence. Let's do that now. God bless the victims and everybody, first responders, doctors, heroes on that day. And let's go ahead and generate our report. And you can see that year to date, the Bitcoin report is fine. So when you're going into individual quarters, you might get slaughtered, but overall for the year, 41%. And then I do also just want to pull up the yearly back test since you hung around for this long. We're going to open up the NASDAQ and we're going to look at the yearly and see how we are doing on the 45-minute chart as well. So the next thing we're going to do is just run the other two yearlies and see where we are at. And let's go ahead and plug in the NASDAQ one more time since we have a little bit of time here. And we'll go ahead and run the year to date 140.48%. You can see huge drawdowns, right? So it depends on where you enter the market. Beginning of the year is never a bad spot to enter the market because that sets the tone. You can at least get into the market and typically make some money in the beginning of the year. Other years, you'll just have a straight nosedive right in the beginning of the year. The last thing we want to look at is the ES, and we're just going to look at the year to date for the ES and see how we're doing. So that way, you're not just seeing the microcosm of what we showed you with Bitcoin. All right, our margins plugged in. We're hitting okay. We're hitting generate report. And you can see the ES is performing spectacularly. And you can also take note that over the course of time, especially longer time periods, like an entire year to date, that Happy Trader just absolutely obliterates. There's nothing out there that's doing 213%. So, again, you can take scalps. Again, if you enter here and the market starts going down, you can hedge and you can wait. You know, if you enter here, you can wait until you get to about here and maybe start to peel those hedges off, but be ready to put them back on. Don't go to sleep with these futures contracts on without risk management in place. So I'm going to leave the video there. And that's really going to be the year to date for all three, along with fiscal Q3. My name's Ryan, CEO and head quant here at Happy Trader. Have a great day and happy trading.